Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 1% there on the S&P. Nasdaq is down about 1% also. Semiconductor did get hit harder today. They were up more yesterday, down more today also. Down 2.2% there, down about 1. Small caps held up a little better today. Negative 0.5% there. Banks down 1%, energy 1%, transport down about 1%. Biotech is flat. Emerging market is down a little bit. Grayscale Bitcoin continues to get hammered. It's down close to 9% there today. Gold and silver down about 1 to 2%, including the miners. Oil's up a little bit. Dollar's up slightly. Treasury bond is up slightly, and VIX is popped about 7% there. Let's stick with this spider S&P 500 ETF 65-minute chart here. So this is where we closed yesterday, and there are a couple of things I've really emphasized on the last night's analysis. One, we wanted to see a gap up about 417 or so, just to get that smooth transition going. Or we will need to fill this gap as quickly as possible. I mean, I really emphasized it pretty much throughout the entire video yesterday that we must fill that gap as quickly as possible. It's best that bulls fill this gap as quickly as possible or gap it over. We start to fizzle too long here, not filling this gap. Things can get hectic. I mean, the worst case scenario, bears might even push it back down to 411 if this gap doesn't not get filled. That gap must be filled if you want to see new all-time highs and beyond. So what happened was on the first hour, there was a little bit of fluctuation here. It looks like the short-term moving average was there to kind of capture that. We found support near that short-term moving average. And then we got up second hour and third hour. We got right to that gap area, and then it tanked. So you can see that there's a lot of fear just right on that gap area, because that's where the selling pressure came about. And a lot of people probably, when this thing got up here, if you went long somewhere up here in the all-time highs, they're just a rush to get that break-even point, or just they might thinking that this might be the good level to get some of that value back. When we saw the initial move, looks like there's a lot of selling that happened just right on that gap area, right? It is no coincidence. It is no mistake. It is no random occurrence that market decided it was going to see that long red bar right on that gap area, right? So this was very, very important, what we talked about yesterday, to keep that momentum going. We blew right through that short-term moving average, right? I mean, I was watching on this hour, so you might not see it on this 65-minute chart. You can probably see it if you go to like a 30-minute chart or 10-minute chart. But at one point, we did see that long upper wick, and it looked something like this, right on that short-term moving average. It looked like that at one point, but not able to hold. There was more selling than buying, so we pretty much saw that Marubozu candle there, long Marubozu candle on that third or fourth hour, right? And then you can see on the fifth hour, we found support on that 411. So we talked about on the last night's analysis that if this gap doesn't get filled, the worst case scenario for the buyers would be this thing coming back down and retesting this level. And that's what we did on the fifth hour. Came down at one point. That lower wick represents that one point this thing looked bearish with the two red candles like this here, color red, like that. And then we did initially found some support right on that vicinity. We got some dip buyers showed up, and we initially saw that hammer candle. It would have been better if we would have closed the market with that hammer candle. Instead, this red candle there pretty much kind of ruined it. So that hammer candle so far it is, I would say about 60 to 70% nullified. I gave about 30% wiggle room there just in case. Only way we can salvage this hammer to become a hammer is to see a gap up above it and stay up for the first 2 hours tomorrow. Something like this, right? First 2 hours, it must stay up, recapturing the short-term moving average. At that point, we can say, that, okay, that hammer is still alive. Or first 2 hours of a bullish run, something like that, we open flat, and then sees a candle like this for 2 hours or so, and staying up above the short-term moving average, making sure it doesn't go any lower. It doesn't close the first hour, second hour, lower than 412.32, the lower it's at today. We can see something like in the first 2 hours tomorrow. We can say, okay, that hammer might have some legs there. If not, if this thing starts to fizzle, and then, you know, first hour we do this, second hour we do that, that hammer has no presence whatsoever. So that's why I said it would have been better if there was this red candle wasn't there, if we would have just closed the day with this. But this is what the market has given us. So as of today, with the data at hand, we want to give benefit of the doubt to the sellers in the short term, because we are not able to fill that gap here, right? And and still it's open. It's been open now for an entire week, right? That was a resistance, and that acted as strong resistance with the tankage that we saw on the third hour today, or second hour, or fourth hour, right? Fourth hour, that was a fourth hour there. And we're back below the short term. We were not able to see that support on the short term moving average, so that the sentiment is back to bearish, and so we're kind of getting into that volatile environment here. So let's zoom out a little bit, check out potential next level of support. So I'm going to zoom out here so you can see the longer term picture. Obviously not long term, but longer term, right? Because we're still looking at 65-minute chart. It's really not a long term. So so you can see we got a couple gaps here, And first of all, I want to tell you guys that this is the reason why you see these pops right here. This is the reason why shorting is that much difficult. This is why you try to time the short. If anybody went short anywhere here, a lot of them already got scared, gotten out somewhere here. You see what I mean? This is why, shorting in an uptrend is the most stupidest thing, lowest probability bet you're going to take in the market. Because it doesn't always, sometimes it does, but it doesn't always smoothly just tank. It's gonna have these little pops that's just gonna destroy your return. It's just, you're usually gonna get out. Usually what's gonna happen is you're gonna get out at the highs before the next downturn. That's why it is incredibly difficult, gonna be extremely difficult endeavor to try to make living off of trying to short this market, especially when we're in a bull market. So now you can see, that short-term moving average has been violated for quite some time now. You can see for an entire week now, it hasn't been really respected much. So we're going to ignore that for now. I think 411 is going to be an important level here. I'm going to put another one just so it gives us a little bit of wiggle room, 410. Just because sometimes it will poke his head down a little bit. You guys seen all that. And then takes a lot of stops out. And then it gets right back. Oh, how many times have we seen something like that, right? So I want to give a little bit of wiggle room here. 410, 411 as a current support, right? And if we do close below it, close a day below this level, I think the market is wanting to get back to this level here, trying to fill this gap at 406. So that's kind of what we're working with here, right? I wonder if there's any kind of pivot. Is there a pivot here? Potentially, you know what I mean? We don't know it for sure at this point. We got these recent highs there, right? And then this is kind of the breakout point. This is where we found support. This is where we closed above it today. So I mean, if we can stay above it, this could potentially be something. As of today, as of now, we don't know. We don't know it yet. So we'll kind of see how the market plays out. Let's check out that oscillator and see if we can extract any more information from this analysis. So the oscillators did fully cross here, right? Did fully cross. First of all, we have to understand there are times where, you know, oscillator did fully cross. You can see we've seen oscillator cross before, maybe here, maybe here, maybe here, maybe here, right? So there are times where oscillator will cross. Doesn't mean we're not going to have these up moves, right? So we may see this thing coming right back down, or we may see something maybe going back up. We don't know that as of today. So that's why you don't want to put too much emphasis on the oscillator. Oscillator is always going to be that supplement to your overall price action analysis. But for now, what the market is, what the oscillator is telling us is that the momentum has shifted. Bulls were not able to hit that overbought level, not able to push it all the way back up. Remember last time when it did that, you see that it pushed it all the way back up, and we saw that prolonged uptrend for a couple of weeks or so, right? So you can see it was not able to push it all the way up. Wasn't able to push it all the way up. And that's what, if you would have pushed it all the way up, that would have been filling this gap. That's why it was important. That's why it was a supplement to our analysis. It's another affirmation to what we found out in the market with the price action analysis. It's never, the oscillator, people just put way too much emphasis, like the oscillator is the king of all this. Oscillator that's why so many people not understanding how to properly use the oscillator, and you're going to soon realize if you too much emphasis on the oscillator, you're going to soon realize you're going to get whipsawed left and right. But anyway, as of now, as of this moment, as of today, with the data that is at hand, we can see that oscillator has a cross, looks like a full cross, right? So that giving us that is confirming that our initial assessment in the market that market was not able to fill the gap. We're still below short-term moving average. We had that strong sell-off on the 4th hour, and with that, the sentiment is bearish in the short term. That's what this oscillator is pretty much telling us. It's bearish in the short term. We got potential supports here though, that potentially buyers want to protect. And if we do, this also maybe cross right back up. We don't know. We've seen something like that here and here. So overall, in the short term, it's bearish. Oscillator is telling us the momentum has shifted. And you can see it in the price section. There's no momentum here. It's been moving sideways now, right? That we don't have the momentum. It's been now either it's a consolidation pattern or maybe a topping pattern. As of today, we don't know, right? For now, we can see that the momentum has been shifted. We're no longer in that uptrend momentum. We're kind of in that volatile environment, sideways consolidation, potentially lead to further upside or downside. That we don't know as of today. So in the short term, I want to give benefit of the doubt to the sellers in the short term because of some of these indications, gap open below the short term, a lot of selling pressure there, a little bit of head fake, whipsawing action that we saw yesterday and today. Oscillators cross back down. But in the midterm, at the same time, we have to understand in the midterm, right? In the midterm, are we bullish or bearish in the midterm? We're bullish in the midterm and the longer term, right? We got to see that my midterm moving average, longer term moving average, they're crossing up here. Keep in mind, we will see these pullbacks along the way. But you know what I mean? So that's why we want to understand not only the short-term sentiment of things, but we also want to understand the big picture. So the bigger picture is we're still bullish in the midterm, but it's still bullish in the longer term. In the short term of things, we have lost momentum after this huge rally that we've seen in the month of April, and potentially where market is trying to decide what it wants to do going forward. So market will tell us. Market will tell us how to what this market is going to do. Tomorrow will be important to see how this market is going to behave at some of these, that pivot and the horizontal pivots and stuff like that, and see how the oscillator is doing tomorrow. And so we'll check back, right? You guys enjoy your evening and good luck trading tomorrow.